All right. Well, I tried. I tried doing this video earlier, and it never saved. So I'm back. I'm back again to do it. So this is the analysis for the week ahead. Obviously, Monday's basically done. The pairs have basically done what I thought they would do, and anyone that knows how I work, they probably thought the same. Euro Aussie short, Euro New Zealand short, dollar CAD short, pound dollar long, and euro dollar long. So if you've got a trade in any of those, then well done. If you haven't, then obviously reach out to me if you were confused why things happened. I mean, you've got a lovely 1 hour break and retest area here on euro dollar, nice deep pullbacks within the 1 hour as well into the lower time frame structure area, lows of the previous 1 hour. You've also got obviously price not quite getting into the impulse zone here, but very closely from an entry there. There was counter trend shorts earlier this morning that were okay to take as well, as long as you were aware that it was counter trend. Pound dollar is very similar, and pound to me is stronger than the euro. So if you're looking at euro dollar and pound dollar long, it would make logical sense that you take pound dollar long over euro dollar long any day of the week right now. It just makes sense to me to look at it like that. If you're seeing that something is a currency is weaker than another currency and they both look as if they should go long against an even weaker currency, take the currency that should be stronger. Every day of the week. Just take it, and then obviously, if it's not to work out, then maybe look at it at the end of the day and be like, well, did it just not work out at the time that I was looking, and something else occurred, or will I actually be be good to just look at this again tomorrow, and that was just the way that it was for that particular day. So yeah, Euro dollar long, pound dollar long, Euro Aussie, Euro New Zealand, and dollar CAD short are my thoughts for the rest of the week, unless something crazy happens on the 4 hour, we get a structure break or something, or a daily real candle in the opposite direction that then says to me, well, there could be viable counter trend trades to come up. So in terms of another thing that I want to talk about is just what I kind of the kind of two or three main areas that I focused on with. I was doing one weekend intensive this weekend. It was cut into smaller parts for a specific kind of arrangement with the guy that I'm working with, which is totally fine with me. I'm pretty flexible if it suits someone to do it in a couple, like a few more sessions rather than just in the two. Then I can do it that way as well. It's not a problem. But basically, one of the things that he was kind of mentioning on the form that I get anyone that I do a weekend intensive with to fill in is about what are their main issues with trading. Like, if I've worked with someone and I know that they've done my course and they look at the charts the same way as me, then it's I know that they're consistent. I know that their analysis is very good. I know that their 1 hour, their 4 hour, their daily chart work is top notch. It's really good quality charts. So then it just comes down to sometimes the timing aspect, which you're not always going to get perfect timing. You're very rarely going to get perfect timing. That's why, to me, stop loss placement is so key in terms of if you're entering on the 5 to 15 minute, you have protection on the 1 hour, 4 hour, depending on the type of trade that you're taking. Obviously, people out there know the different types of trades that I take, the different type of stop loss placement that I want. I've done videos on it. I'll do more in the future as well, but that's essentially what we're talking about. So one of the one of the kind of conclusions that we came to was using the stochastic indicator on the lower time frames to help with gauging deep pullbacks. Now, obviously, structure, price action is always first. It's always going to be first, but you can look at pullbacks, and then actually ones that don't work are more likely that they weren't deep enough of a pullback on a certain time frame to actually get the value, get the momentum pushing that allowed price to go in the desired direction that it wanted. Now, for example, if we just look at pound dollar, I've not done an analysis of the day yet, so we'll be able to see firsthand. So obviously we have the 15 minute structure breaks. We have here one, that's a structure break to the upside. Here it's not really retested. Here we have multiple little ones. That's the bigger one here on the 1 hour is here. So we get a push into the highs in this candle here, 11 till 12, and then we actually close beyond it in the 1 till 2 and a really deep pullback in the 2 till 3. That's the kind of 1 hour look at things in order to get the trade, and then that's the same with the 15 minute. You get that push above and then pull back. So if I was to then look and be like, right, okay, well, look at this area here on the lower time frames using the stochastic. Now you can tell that obviously the structure, it's structure. That's there's no denying that. I'm not someone that puts. I used to put indicators before price action years ago, just through my journey through that's how it happened. But now definitely not. But I still find that indicators it can help gauge what pullbacks are more likely to be impulsive continuations in your direction rather than getting into a trend. So if we look here, you can see that price was very close to oversold. Didn't quite get down there, but we did have oversold in here. We had oversold in here. We had oversold in here, which obviously, with the bias being long on the higher time frames, anytime there's oversold on the lower time frames that lines up with price action structure can be a time that you start looking for a reason to enter a trade. Now, if we look at this on the 1 minute, so even more of a smaller time frame, so even more likely to be a deeper pullback, you can see clearly here that we have multiple times that price is in that oversold area that you can be looking for longs. Now, no matter if you're entering, like, no matter where in this kind of area that you're entering, whether it's this area, or even before, the thing is, your stop loss is always going to be below these lows, because if you look at the time, this is 20 past 2. Well, actually, it might not be below. So that would be half one. So that's the low of the 1 till 2, and then this is the 2 till 3 candle. So it could be a bit higher. That was the 12 till 1 low, so this is the 1 till 2. So it would be basically just below here, entering in there. The 1 till 2, so then that would be kind of, especially in this entry here, where it's at more at the start of the new 1 hour. You just give it that bit of protection. What's that? 26 down into 16, so around 10, 12 pips. You can see that price does go well beyond the 10, 12 pips of your stop loss. Obviously, it's not one of these Instagram less than 3 pip stop losses, but in all honesty, if you were to look at it in terms of longevity, you just have to deal with larger stop losses. There's only so much that people can get away with really, really tight stop losses, because it does come and get them in the end, and that's just the way that the market works. It fluctuates a lot more than just 3 pips here and there. Obviously, yes, people have these order blocks, etc. Order blocks and stuff like that, to me, are basically with the trend, but the order blocks that they're entering on the structure area, it's all the same stuff. Now, if they're entering at that area, it's essentially just like if they're looking for longs, it's essentially the last higher low that created the previous higher high, broke beyond the origin of the last pullback to create the higher high, so it shows that it's a strong area. Price basically comes back 100% of that original move, and then gives an entry because the higher time frame bias is still long, but it's had the deep enough pullback to make people think that it's going to go short, and it continues on long. So that's there's nothing fancy about that. It's just about waiting and just being like, right, well, even although there was sales this morning, okay, if you'd taken those early doors, pound dollar, it wouldn't be me personally, but that also says that whenever you're up in London, in the morning, first thing that you're looking at the chart, you're not gonna see a trade immediately all the time, because if you're looking for that bias to go with the bias, and the bias being long on pound dollar, you're going to have to wait until the buyers start showing their hand, rather than just trying to call bottoms for the sake of, oh, it's a bottom. But it's not until actually price shows you that buyers are coming in. Buyers came in and then they stepped in more, and all you need to do is wait for that pullback and then the continuation, and you get the majority of the trade without having to always risk it to try and get in at the absolute start of a move. You don't need to be in at the start of the move. Let the people that move the market create the move, and then if it's on a higher time frame with the bias, it's going to keep running for long enough that you can get in on the trade. So I'm going to leave this video here. I hope you have a great week trading, and yeah, any questions then let me know. I have one more spot for the weekly intensive as well for March. This weekend, the last weekend in February, is full. So yeah, I'm really liking that format, and I'll be adding some new videos to the course as well for the future. So yeah, that's it for this video. And if you've got any ideas in terms of educational content that you want me to do, then just let me know. I don't want to just kind of create for the sake of creating. I want to try and help as much as possible. I have like bits of paper here of like topics, like why you should not pick bottoms or tops, what to look for in terms of lower time frame structure breaks in higher time frame structure areas to then allow you not to do that, a step-by-step trend trading guide, how to successfully trade the 1 minute time frame, how to trade using pending orders so that you can get on with your day using like 4 hour areas, 1 hour areas, just entering on price. Slightly larger stop losses, slightly more time and possible drawdown, but it still is something that's effective. So yeah, and other kind of subjects, like kind of thoughts around all that. So I'm just looking to add 2-3 videos a week to the channel, hopefully help at least one person a day. Whilst these videos can be watched, obviously 24 hours a day, 7 days a week, that's the beauty of YouTube. So I'm just looking to kind of push the kind of availability of solid information that people can take notes on and add to their own trading to make themselves a better trader and more independent trader.